So you want to learn how to trade. Today, we're going to cut through all the hype and give you a real, no-nonsense guide on how to actually get started. And this isn't just some textbook theory. Nope. This is a practical roadmap that comes from a true story of massive wins and some truly devastating losses. Let's dive right in. Okay, right off the bat, let's get one thing crystal clear. The dream of making a fortune in the stock market, it's real. It can happen. But, as this quote makes pretty obvious, so is the risk of losing every single penny you have. It's a total double-edged sword. And you know what? Most beginners only ever see that shiny, profitable side. All right, so for our first section, let's talk about exactly that, the dream versus the reality. We're going to break down the biggest myths that trip up almost every single person who's new to trading. So what pulls most people in? Come on, it's the fantasy, isn't it? The dream of making quick cash, of turning a few $1,000s into a fortune overnight. Maybe you're even picturing that Lamborghini in the driveway. This is the powerful marketing of trading, but trust me, it's a super dangerous fantasy to believe in. And here's the reality check. The text you see here says, "Trading se tum amir nahi ban sakte," which translates to, "You can't get rich from trading." Now, I know that sounds incredibly harsh, but there's a really important catch. You can't get rich if you treat it like a lottery ticket. See, trading is not a get-rich-quick scheme. It's a business, and like any business, it needs capital, it needs skill, and it definitely needs time. And this right here breaks down the core problem perfectly. The reason trading gets such a bad rap is that most beginners treat it just like gambling. They make these wild bets based on a feeling, they chase these quick doubles, and they totally ignore the risk. But professional trading, that's a business. It's a skill you build over the long haul, and fundamentally, it is all about managing your risk. Okay, so let's hit the bricks for a second and go back to the absolute basics. I mean, before you can trade something, you have to understand what it is you're even trading. So let's answer that question. What exactly is a share? At its absolute simplest, trading is just buying something with a plan to sell it later for a profit. It doesn't matter if it's phones or onions or anything else. In the stock market, that something we're trading is a share in a company. So what does that actually mean? Well, our source gives us this brilliant analogy that makes it super clear. So for a second, forget about balance sheets and all that complicated jargon. Just picture a big company as a giant chocolate bar. Look at it this way. If the entire chocolate bar, that's the company, is worth, say, 12 rupees, and you break it into 6 equal pieces, well, then each piece is worth 2 rupees. Those little pieces are the company's shares, and that 2 rupee value, that's the share price. So when you buy a share, you're literally buying a tiny piece of that company. It's really that simple. All right, now that we've got the basics down, let's get to the real heart of this whole thing. A true story about what happens when a beginner gets that first taste of success, and then lets greed completely take over. This timeline, man, this is a devastatingly common story. So our narrator, a gym trainer, spent over a year saving up 100,000 rupees. He starts trading with just 20,000 of it. In only 4 days, that 20,000 turns into 60,000. The dream felt real. And then the greed kicked in. He dumped more money in, chasing an even bigger win. And just 2 days later, it was all gone. Not just the profit, his entire life savings wiped out. You know, that devastating loss taught him the single most important, absolutely non-negotiable rule for anyone who wants to start trading. It's a rule that goes against everything the get-rich-quick crowd will ever tell you. That's it. Get a job or build a business. You absolutely must have a stable source of income that has nothing to do with the stock market. Because here's the crucial point. When you are just starting out, you should never ever rely on trading to pay your bills. So why is this so critical? Well, first, it guarantees you can eat and pay your rent. Simple. Second, it gives you capital to add to your account when you have losses. And believe me, you will have losses. It also teaches you the value of money, something you just don't learn when it feels like easy market money. And most importantly, it gets rid of the panic. Trading with money you can afford to lose is strategic. Trading with your rent money, that's just desperate. And desperation leads to catastrophic mistakes. Okay, so you've got a job, you've managed your expectations about Lamborghinis, so how do you actually begin? Let's break down the practical first steps into a real action plan. So here's your 3-part foundation. First, save up a dedicated fund just for trading. Next, you'll open a demat account, which is just the official account you need to hold shares. But, and this is crucial, Before you risk any real money, you start with paper trading. This means you're using a simulator with fake money on a real platform so you can learn all the mechanics and test out your strategies with zero risk. Now, when you do eventually start with real money, you have to adopt this mindset. Your first real loss isn't a failure. You have to think of it as the tuition fee you pay to the market for your education. It is so much better to pay a small fee now because if you don't learn the lesson, the market will eventually come back and charge you a much, much higher price. And finally, here is your learning path. Please don't just jump in randomly. Start with the absolute basics. Learning how to read candlestick charts. They're like the visual language of the market. Once you understand them, then you can move on to recognizing chart patterns. These are recurring shapes that can give you clues about where the market might go next. And only after you've mastered these fundamentals should you even think about advanced stuff like intraday or options trading. You've got to follow the process. So that brings us to the final question you really need to ask yourself. As you start on this journey, are you approaching it with the discipline and the patience of someone building a business for the long term, or are you just walking into the casino hoping to get lucky? The answer to that question, well, it's going to determine everything.